Welcome, everyone, to the Q1 2025 Jacksonville Real Estate Market Update. This is our most watched show every quarter. It's our most listened to podcast every quarter. This is our best one yet. I am your host, Pablo Gonzalez. With me, as always, a man that I affectionately like to call GC because he's got the genius concepts, especially today. He knows how to generate cash flow. He's a great co-host, which you won't have to do today because I'm going to be co-hosting. And his name is Gregg Cohen. Say hello, Gregg.
Hello, everybody. Fantastic to be with you today.
Buddy, I've been pumped for this show since I saw you do the sneak peek of it at the TMM last week.
Yes.
We're gonna just trounce right into it because I want you to have plenty of time. I want people to use the Q&A. We're going to go through a lot of data. Gregg has some really new, non-obvious data, insights, perspective, all the things that he's known for, concepts, all the things that he's known for. So we're going to dive right into it. This is the thing that you most prepare for every single quarter. I saw you hard at work. I know that we pulled a call to action. Your clients are here. The JWB team is here. As always, all this stuff is thanks to the JWB team. You and your partners have built a team that handles all this stuff. You get the privilege to be up here. If you're a JWB client right now, count on your portfolio manager to update you on these kinds of things, to be your beacon. If you are new here, this is just insights from the #1 real estate company in Jacksonville that has the most proprietary data. You were telling me early today about how you guys started looking into the MLS and manually putting things into a spreadsheet way before all this data was available.
Right.
And nowadays, you have this giant data flywheel and an advantage. That being said, we're going to go into a whole bunch of presentation here from Gregg that we'll have a bunch of slides that you're going to want to have. So all you got to do these days, if you want to start a conversation with JWB and you want to get things rolling, go text 904-293-0341. Again, just text 904-293-0341. If you want to, ask, get started in your real estate journey, you want to take advantage of these amazing dynamics that are happening in the market in an uncertain world, or if you want to receive the slideshow, it's not going to happen immediately, but they'll send you the slideshow. We get a lot of requests out of it. So without further ado, GC, let's get you going here. We're going to be sharing this Q1 2025 Jacksonville Real Estate Market Update. This is the financial disclaimer we have to do before all financial stuff. Do your own due diligence. This is not financial advice. This is data from Gregg and opinions from Gregg that we are given. But GC, one of the most fascinating things that I heard from you when you gave me the sneak peek of this thing in front of the team is just, we've been talking about this fear market. We've been talking about all the scary things in the world, and it's just felt kind of like a ride, man. It's felt like a crazy ride.
It has.
Tell us about it.
It has absolutely felt like a ride. And, I think before we jump into this data, and guys, just so you know, my focus for doing this presentation, this market update, is really to dive into the data, specifically on the market, and to take on some of the, I think, biggest questions and biggest challenges that you might have for yourself, whether you're thinking about investing, or definitely we are hearing in the investor world about why single family rental properties make sense, and just attack them head on and start to just dive in. So that's really what we're going to do. Now, in order to dive in and look at the data on the market, I think some perspective is really important. So this ride that we've been on, of course, I'm talking about the interest rate roller coaster that we have been on. And this has been quite a wild ride. I think it's important to have this perspective as we start to look into the market dynamics because, guys, this has controlled the narrative for 3-4 years now. But I don't know if we truly understand just what a ride it has been. So, of course, I brought the data with me here. And so this is what we have experienced as citizens of this country, certainly as real estate investors since 2020. And I even want to go a little bit farther back. Let's put this in perspective. So from January of 2012 until December of 2019, that's 96 months, I looked at how much did our interest rates actually change. And from that time period, our interest rates changed from about 3.3% to about 4.9%. So it went up some, it went down some, but it largely stayed within about 1.5 points for interest rates. Well, then January 2020 hit. Months, you saw interest rates go down almost as much as they had varied for like 7 or 8 years right there. Within 12 months, they went down almost a full percentage point. And then the roller coaster effect really started to shake shape because we all know what happened since January 2021. January 2021 through October of 2022, that is 22 months, we saw interest rates go up 4.2%. And again, to put this in perspective, there is only one time in US recorded history that interest rates have risen as much in a 22-month span. And that was over 42 years ago. So this is certainly uncharted territory for our economy, for citizens. We don't remember 42 years ago. We probably don't remember 42 minutes ago for most of us. And we don't know how to act as investors. But what was really interesting is I said, okay, well, when that happened 42 years ago, what happened next? And is that the same or different than what we've been experiencing since October in 2022? And guess what? It was very different back in the day. So when interest rates rose like they did 42 years ago, what happened right after that point is that they fell again substantially. For us, not so much. So as we went up 4.2% from January 2021 to 2022, for us, interest rates have done mostly the rise since then. So we have not seen relief. Interest rates have mostly gone up and hit an all-time high or hit a high during that span of 7.6%. 42 years ago, when this happened, interest rates dropped by about 25%. So this really is uncharted territory for us. Even when they went up so dramatically 42 years ago, there was some relief right after. It's been no relief, right? So when we start to think about how the market should be performing, it's impossible to ignore this impact, not just of the rise, but the subsequent rise and the subsequent length of time that interest rates have stayed high. Does that make sense?
Yeah, man. As you're describing unprecedented times, it feels like this is the moment where anybody can have an idea on anything, right? Because it's so unprecedented. What I find really compelling about the data that you're going to put forward here is this combination of data and seeing what we're looking at, is the perspective that you've had by being here for 19 years and some of this like analysis that you've done that makes a ton of sense. It makes me feel a lot better about this idea of going into like really unprecedented kind of time.
Yeah. And the reality is that when interest rates go up, we know that suppresses housing demand. So the question for a long time has been, hey, listen, our home sales going to go down, our home price is going to go down. And I just think that type of backdrop is important as I share with you now what has happened for our Q1 Jacksonville real estate market update, and even what has happened over the last year. You would have expected, if you had asked me and interest rates went up this high, this fast, and stayed this high for this long, it would have been reasonable to assume that home prices would have gone down. But guess what, guys? I've been sharing that data with you now for years and years and years, that home prices in Jacksonville have continued to rise. And so as we look here on the market snapshot, I put the sales data here as well as the rent data. And we're going to take just a quick look here, and then I'm going to dive even deeper into what we see here and bring up some key metrics and some key takeaways. So on the sales data side, and this is through February of this year, our median home sales price in Jacksonville is $350,000. That represents home price appreciation in 2024 of up 0.4%. So we appreciated for year over year gains in Jacksonville to the tune of 0.4%. Again, that's why I thought that perspective is so important, right? Anybody else would have thought that we would have gone down with interest rates being this high. You have to ask yourself the question, how did prices still go up? And we're going to spend some time talking about that. Median days on market is very normal for our market. In fact, I just pulled the data from 2015 to 2019. Our average days on market was 46. So we're 47 days on market, a very normal market. Months of inventory, something we talk a lot about on this show. And months of inventory is 6.1. This is the first time that months of inventory has reached 6 while we've been doing this show.
Since I've been on the show, 100%.
We're going to talk a lot about this here in just a couple of minutes. And then I always include foreclosure rates. Sometimes you read random articles about people saying foreclosures are a thing or whatnot. They're not a thing. A normal market has 10% of properties as foreclosures. We're still hovering right around 2.5%. So nothing to take shape or nothing to be concerned of there. Foreclosures are still way down, just as we predicted they would be.
Yep.
Now on the rent side, I put together here, rent data is a little bit different. You have to use, the best thing to do is to use proprietary data and market data if you're lucky to have proprietary data. And so I did a combination of those. So for JWB, we manage over 5,500 single family and multifamily rental properties here in Jacksonville. Our average rents are $1,473. And then I looked at the rent prices. Have they gone up? Have they appreciated in Jacksonville? And guess what? Rents have also gone up in Jacksonville to the tune of 0.7%. Common question we get on the show, and even for clients or friends or people who are thinking about investing, aren't rents going down in Jacksonville and across the country? And I'm here to tell you guys, rents are continuing to go up in Jacksonville, just like we have been sharing for, well, it's been that way. I'm gonna share just how normal that is in just a second here, but rents are continuing to go up. Average days on market to move in. This is the days of from JWB perspective, from when we market a home to when we move in. That's 69 days. That's higher than what we want, right? And we talked a little bit about this in the last quarterly market update, so we're going to dive into that a little bit as well. But guys, look at occupancy and rent collection for JWB. Occupancy is almost 98%. In the property management space, 90 to 92% is the industry average. The best players that we have seen are somewhere around maybe 93 to 95% occupancy. JWB occupancy today, close to 98%, something we're really proud of. And I hope you feel really confident about knowing your assets are in a great spot and collecting rental income. Again, rent collection rate, 98.5%. Again, the best that I've seen for anybody that actually measures this stuff. So a lot to be thankful and proud of for our team here, delivering through some, we will say, challenging times that have hit the real estate market, especially because of high interest rates.
When I look at these numbers, I see market data that you're using. I'm assuming straight from the MLS. This is what the MLS is reporting on the sales numbers.
Yes.
And then I see proprietary JWB data of, like your scatter plots and your data points of the 6,000 homes that you rent. Is there anything else that's informing these numbers?
No, it's just like you said, it's either MLS data for sales. On the rental side, there's really not great data on the MLS for it. So you do a proprietary sample if you have it. And then you can also use we pay consultants to help us analyze the rental market and the sales market as well. So that the rent price appreciation is coming from John Burns and some of these other sources that we pay for. So yeah, that's the sources.
Got it. All right, GC, then I know that you have 3 big takeaways that you want to jump into this on.
All right, guys. So we just did a little bit of an overview. Now let's dive in. This is where I think we can really bring data perspective and give you some insights to help you make wise decisions with your money. So here are 3 insights and takeaways that I wanted to share with you. Number 1 is that Jacksonville home prices went up again in 2024. I feel like real estate investors have been made to be on the defensive of like, hey, why is there not a crash happening? I would have expected a crash to happen. It's almost like people think that that's normal or that home prices decline, and it's not normal. And the data shows this. In Jacksonville, home prices have risen every year since 1982, with the exception of the Great Recession years. And we have talked at length about how that was an anomaly. So it is very normal for home prices to go up. And that's what they did in 2024, even though interest rates went way high and stayed way high for way longer than we have ever had in U.S. recorded history. Yeah. So again, just showing the stability and the consistency of this asset class, and something that is really attractive for you to build retirement account investing based off of, or whatever outcome that you want.
Got it. And we're talking about going up year over year is what we're talking about.
That's
right?
Correct.
Yeah.
Yep. So now the other thing that we had been predicting that not a lot of other folks were for the last couple of years is that Jacksonville home prices would normalize. And so the slide that I put here is what I hope to kind of illustrate by what I mean by normalizing. Okay. So the slide here shows all of the median home sales prices in Jacksonville from 2001 all the way through present day. And the blue lines are the actual median home sales prices. The red line, the smooth line, is what we would expect the median home sales price to be. And what this does is it takes the average annualized rate of appreciation and says, hey, listen, that's normal for what the market should do. Okay. Well, when we say that prices are normalizing means that that blue line is going to kind of go up a little bit above the red line and come down a little bit below the red line and go up and down and up and down. And it kind of oscillates across that line. That's normal. And so I think to help us understand what does a normal market look like and why did JWB predict that this would be a normal market, it is best to look at what an abnormal market looks like. So if you would help me there, Vanna, and click that little magical button there. There we go. This is a point in time that there was an abnormal market. This was June 2006. And when we describe something as abnormal, it is deviating from the norm. So the best way to look at a deviation from the norm is how much percentage higher is the price or how much percentage lower is the price than what we would have expected. And in June 2006, right before the Great Recession and the crash, home prices in Jacksonville were 53% above the line. Guys, that is an abnormal market, and we would expect something abnormal to happen to correct itself afterwards, which was the Great Recession and the crash. Exactly.
Got it.
But then if we believe in this theory that real estate is cyclical and that you would get back to the norm, we would expect that to come back up to that line, which it did, right? And if you're wondering why JWB doubled down and hired more and invested more in 2006, 8, 10, 12, it's because we believe this would come back to the line because these things happen in real estate. Well, if we fast forward to June of 2022, we said that this was going to be a normal market. What were people saying in June of 2022? Do you remember what the talking heads out there were saying?
Well, I know that every time that we ask about talking heads, they're saying there's going to be a real estate crash.
Exactly. It was really loud in June of 2022, especially as interest rates started to rise.
It's going crazy.
It was all the chatter. And we said, hey, listen, we expect this to be a normal market. We would expect this sort of up and down thing to happen across the median expected home price line. And one of the reasons we said that is we were only 12% above the line. And guess what, guys? That's what has happened. Now we're sitting here and we're looking at the fact that we're actually below the line. And some people might say, oh, geez, is that a bad thing? And what I want to share with you all is that normalization is going above and below the line, above and below the line. And that's what we predicted. That's what's happening right now. And that's what we expect to happen going forward in the Jacksonville real estate market.
Got it. You see, if we're looking at this, trend line here, is there a way, like, if I got an appraisal like here, and then now I'm here, could I have the perception that my home price dropped?
You might. I don't think many people look at it this way, but maybe people that are watching now might conclude that. And that's not what's happening here. Home prices have actually gone up year over year, like we stated, but that doesn't necessarily mean that it affects your individual property or that your property due to seasonality might go up and down. If you look at home prices on a monthly basis, they actually go up and down due to seasonality. So those median lines right there are talking about what's happening on a monthly basis. When we talk about home prices going up year over year, that takes the seasonality out of it, and we see home prices go up year over year over year. Does that make sense?
Yeah, for sure. So this is where we are now?
Yeah, so we're actually 4% below the line. Again, very normal, something that we would expect to continue is to kind of go through the ups and the downs within a small range around that median expected line. And the great thing about investing in Jacksonville is that median expected line is a lot higher than other markets out there because we are a growth market. So this is a great thing.
Makes sense. All right, so we are kind of on schedule here with pricing, right? Like we said, it's going to normalize. It's going to kind of like not be so crazy as before and is going to continue on its regular trend. The other thing that you mentioned is months of inventory.
So I'm so excited to jump into this with you guys. We have been talking about how months of inventory are really important as a leading indicator of home prices in the short run. And we have openly talked about how months of inventory were insanely low for many years now, and that they had to go up. It's actually a healthy thing for all of us as real estate investors for months of inventory to go up. And if this is your first time hearing about months of inventory, what we're tracking is the amount of inventory on the market divided by the number of sales that happened in the previous month. And it helps us see what our months of inventory are. That's how many months would it take to exhaust the current inventory on the market given the same rate of sales. And historically, between 6 to 7 is equilibrium. Lower than 6 would be, you would expect higher than normal home price appreciation in the short run. And higher than 7, you would expect lower than normal home price appreciation in the short run. That does not mean price declines. It does not mean once you get to 7, prices just go down. It's just one indicator that is very important to keep note of. So for friends of the show who have been paying attention here, guys, we just crossed 6 months of inventory. What does that mean? This is uncharted territory for us in the Not Your Average Investor show.
It is the highest it's been since we've been doing the show.
Guys, it is okay. It is okay for buy and hold investors. And I'm going to dive more into that here, but I want to just see the numbers. I take year over year, 2019, and then I did 2024 and 2025. Why did I do 2019? It's because that was the last normal market prior to the COVID effect. And that's what we, tie ourselves back to in order to make good sound judgments here. But in March of 2019, everybody thought this was an awesome market to invest in. And we had 4.3 months of inventory.
Yep.
Many people didn't know this.
Yep.
We had about 8,000 homes on the market. Nobody was saying, hey, we were way high on inventory, or that months of inventory was way high and months of inventory had increased to astronomical levels. Nobody was saying that. And that's, again, a reason why we predicted that we would be normalizing as we got into 2024 and 2025. Well, as we get to March of 2024, we see for sale inventory is at about 9,000 homes. We had more sales, but we were right at that 4.3 months of inventory. But we were creeping up. And I was telling you guys, it's going to get to 6. It is okay. It is okay. Well, now we're here. We're at 6 months of inventory. Inventory has increased. We have over 11,000 homes on the market. And sales have actually gone down a little bit year over year. So now we need to look a little bit more into that. Is this okay? Or is this a sign of some troubling times coming along? I've already spilled the beans with you guys that it's okay. So I'm going to tell you why it's okay.
Got it.
But the common thought out there and what you're hearing and the noise in the system all says that this has to be inventory related. It's that inventory is skyrocketing. And these are two really respected sources that, quite frankly, are missing the point a little bit here.
Tell us the point. Tell us the point.
Because I broke it down and I wanted to understand just how much inventory has risen. And if you look from August of 2023 to August of 2024, inventory in Jacksonville surged 62%. We were at about 11,000 homes on the market in August of 2024. Fast forward now to March of 2025, we're at 11,374. Our inventory level has only grown 4% since August of 2024. So the big spike of months of inventory going from 4.3 to 6.1 is not due to inventory surges or inventory spikes in the Jacksonville market over the last 8 months. And that's a really important point. So if it's not for sale inventory, if it's not inventory in general, and you know that months of inventory is going up, that means it has to be sales, right? The number of sales is what we need to focus on.
Another way to say it is it's not supply.
Yeah, exactly. It's not that you've just had a glut of homes that are just filling the market in Jacksonville. It's not inventory related over the last 8 months.
Got it.
Right?
It's just sales has dipped. So now let's look at sales.
Right. Now, another way of saying it, if inventory surged 62% in the last 8 months, then I would be drawing a different conclusion.
100%.
Right?
Yeah.
And unfortunately, a lot of the headlines out there just don't have access to this information or don't know how to read it. So those inventory related articles are a little bit outdated.
Okay.
So it is sales, but it's not that simple. We need to dive a little bit deeper here. So again, showing how we got from August 2023 to August 2024 to March 2025, and you saw months of inventory go from 2.7 all to 6.1. Well, the biggest driver here is sales. And if we look in August of 2024, we had about 2,500 sales in Jacksonville, and we have about 1,850 here in March. So that's a pretty big change. What happened there? Is this a sign that people no longer want to be buying homes in Jacksonville, or is it something different?
Yeah. I mean, I wouldn't guess it's people not wanting to buy homes in Jacksonville based on the economic activity in this in the city.
Exactly, right? And now I wanted just to take a step back and think the idea of buying a home in Jacksonville, how does that look compared to other places in the state of Florida? Or how did that look compared to other places in the country? And so I pulled some of the economic indicators that would lead to people wanting to buy a home and choosing a market to buy a home in. You can see the 5-year population growth rate. In Jacksonville, our population has grown 12% in the last 5 years. That's the third highest rank in the state of Florida. And that's the 5th highest in the entire country. So clearly people are moving here and they need a house to live in, and many people choose to buy a home. So people love moving to Jacksonville.
Not surprising. There's been top 10 most people moving to lists for the last 15 years that I remember to Jacksonville, right?
Exactly.
Okay.
Exactly. 5th highest in the entire country.
This second one's a little bit more surprising to me.
Right? Median household income. People are earning great wages here in Jacksonville. Our median household income is $82,700. That is the 2nd highest median income in the state of Florida. Higher than Orlando, higher than Tampa, right? We're only behind Miami. So the fact that we have people moving here and you can earn a great living here is pretty incredible. Going down to the next one, how much does it cost to live? Well, our cost of living is 0.8% below the US. That is the best cost of living in the state of Florida. And then unemployment here. When people move here, people are, of course, employed. Our unemployment rate is 3%. That's the number 2 lowest unemployment rate in the state of Florida, number 12 lowest in the entire country.
These are all numbers that I have felt by living here, right? I talk a lot about how my wife was making X in Miami, and now we've been here for 5 years, and she's making 2.5X what she was making in a W-2 job. My cost of living dropped by 40% the moment that I moved here. I've kind of been snickering at all my friends in Miami about how I've been able to grow a real estate portfolio while everybody feels like they're getting choked out in living expenses. I think these numbers in a vacuum are one thing, but this data of talking about purchasing power that you put together, I think is really, really powerful.
Yeah. So the value of choosing Jacksonville and to buy a home in Jacksonville is really strong, and people rush to value. People make decisions based on value. So then I did some data here and I said, okay, if we looked at the overall purchasing power in the state of Florida and we took the median income and divided it by what does it cost to live in different cities in Florida, Jacksonville's number 1, right? Jacksonville's overall purchasing power is better than Orlando, Pensacola, Tampa, Daytona Beach, Lakeland, Port St. Lucie, Miami. Right? So if you're thinking about moving here, you're in a really, your purchasing power is going to go a lot farther here than in other places. And then I started to think, okay, well, purchasing power is one thing, but how about buying a home? Because now I'm trying to relate it back to why are home sales lower? Did people just all of a sudden just decide that this isn't a great place to live, to move, or to buy a home in? And of course, that's not the case. So then I looked at what is our home purchasing power in the US for growth markets. These are markets that have grown at a rate that is higher than the national average over the last 40-something years. And these are, by the way, these are the only markets that hit that. It's a relatively small number of markets out there. But for all of the growth markets, places that you want to put your money where it has grown more than in other places, Jacksonville is number 3 in the entire country for home purchasing power. You can get more of a home here in Jacksonville, the third most of a home out of anywhere in the country if you want to be in a place where values are growing.
Again, not surprised, but to me, the thing that I'm seeing in these 2 charts is this idea of why so many people have moved here from out of state. And now what we're really feeling is why so many people from in-state are moving here and buying homes and stuff like that.
So we know a lot of people are moving here. We know why they're moving here. What's happening? Did people just decide not to buy homes? What outside force is happening to us that resulted in the number of sales going down. Well, here's what it is, guys. Low interest rates pull forward future home sales. High interest rates push back current home sales. So when we were doing the show in 2020 and 2021 and interest rates were so low, we talked about how we were pulling forward demand. Can you kind of share what that means?
Yeah, pulling forward demand is essentially saying, hey, I am setting myself up for success. If I have this life plan and I know that in the next 5 years I'm going to make this decision, and economic conditions have like made it particularly favorable to make the decision now, I'm going to do whatever I can to make it happen. That's the reason why I cashed out an old IRA in order to buy my third property. It's, you know, like it's the reason for many people saying, okay, maybe I'm going to buy this home that I might not be able to afford right now, but today it's really, really affordable based on my monthly payment as well.
Exactly.
Yeah.
The biggest impetus to you thinking that in our conversations was, you know, interest rates were like 3.5%, 4%.
Correct.
You know, so that's the effect. If you really want to augment buying demand for houses, lower interest rates are the single greatest lever you can pull. Well, conversely, when you have higher interest rates and they stay here a lot longer than they ever have, again, going back to that data, 42 years ago when they rose as much as they did, they went down right after that. Now, when it's happened, they have stayed high and have even gone up in the months that follow. When that happens, guys, at some point, it suppresses housing demand. Some point, it's suppressing it a lot. And we're starting to see that happen now, right? There's only so long it can go on where people are dealing with high interest rates.
True.
And so you're starting to see that, and that's resulted in lower home sales in the short run. Right? And guys, listen, this is still new. Okay, like it's not like home sales have fallen off a cliff, and it's not like this has happened. I'm looking at the last 8 months here. What I'm trying to help you see is that if interest rates continue to stay this level and they don't go down, I would expect this to continue to happen, the suppression of home sales going forward. So I put some data to it as well. And I said, okay, what does suppression of home sales really mean? Well, to me, and this is how people generally do it, you want to look at mortgage applications, right? If people are, if interest rates are so high, you would expect that mortgage applications would be down a lot. Conversely, back in the day, mortgage applications were through the roof when interest rates were so low. So put that in a chart here. And what you find right now, mortgage applications are down 70% from their peak, which was actually March of 2022. Mortgage applications today are actually down 32% from what the normal mortgage application rate would be. Now it's from 2015 to 2024. What you would actually expect is that mortgage applications would be higher than what the norm would be from 2015 to 2024 because we have more people living here now. Our population is now 1.8 million people. So you would actually expect it to be a lot higher. But we're down 32% right now. And when mortgage applications are down, home buying, home demand is down, and that ultimately results in lower home sales on a monthly basis.
Explain this chart real quick. So this line here is the amount of mortgage applications. This other line here is the mortgage rate.
Yes.
So you're seeing this like juxtaposition between kind of like how the amount of applications lags a little bit based on the way that this thing goes up, and then it completely separates.
Yeah, I just think it reflects a couple of different things. It reflects that the longer that interest rates go on, the effect of suppressing demand for mortgage applications and for home buying, the effect gets augmented, right? So what I mean by that is if you look at interest rates going up and up and up and then staying up, you're seeing the mortgage applications line go way down. I mean, it has fallen sharply, right? So I think that is one takeaway. Here's the other takeaway. You know, it's interesting because the peak was in March of 2022. When were interest rates low? Were the interest rates low in 2020 and 2021?
Yeah.
That's
when it was really low.
Why do you think that it peaked? Mortgage applications peaked in March of 2022.
I think there's just a lag. I think people are slow to move on understanding an opportunity because they don't have the perspective.
That's 100%. People are late to the game. People are listening to outside sources. They don't talk to experts who have been here. If you were a part of the show in 2020 and 2021, we talked about the deal is the
debt.
The deal is the debt, right? The deal is the debt. And we helped clients really build massive real estate portfolios. They pulled forward demand. They added properties in 2020 and 2021 and when interest rates were low. And our population, our community here was not late to the game. But that's a beautiful thing about our community. We're not average. We'll say that.
Yep.
Average is late to the game.
Got it. So I guess this is the conclusion then. So once it comes back up, people will start piling back in.
Yeah. Here's the thing, guys. This is expected. If interest rates are going to be this high and stay this long for this homes, right, at the same rate, but we are all buy and hold investors. And what this is doing is it is suppressing housing demand. When you are in a market that has such value to offer people to move here, and you are the 5th highest population growth in the entire country, people are moving here. They're saying, this is where I want to be. People want to buy homes. People are going to make that decision to buy homes. And the greatest lever is going to be interest rates. And so when interest rates come down or people just get comfortable with what interest rates are as the new normal, you're going to see home sales go up sharply. And the way to think about this is just adding additional home price appreciation in the future. That's the way that we think about it here at JWB.
When I think about those two graphs, GC, right? And I think about like this thing's been up for so long and it's down for so long, and I know that people are going to take time to go to kind of catch up to the opportunity. And I think of that trend line being below think of that blip being below the trend line. I can't help but to come to the same conclusion as anonymous attendee is putting, that it feels like a good time to buy if you're looking at the data. Is that the conclusion there?
Guys, I think this is a great time to buy.
Okay.
And I think it's a great time to buy for non-obvious reasons.
Yeah.
Right. I think one of the things that we can do the most and is help the most is to share the difference between what average people are looking at and then zone in and just, see an opportunity that other people don't see.
Yeah.
And I think buying rental properties in a market like Jacksonville right now is a great opportunity. And don't be scared that home sales have gone down, because if you believe that people are moving here, I mean, that they're moving here, you can see the stats, but if you believe people are moving here and want to buy more homes than they currently are doing right now, just think about what that means for future home sales.
Yeah.
And what does that more demand mean for home prices over time? You're going to have a little bit of deferred gratification.
I love it. So if you want to get started on that, 904-293-0341 is the number to text, 904-293-0341. So GC, prices are one thing. As a rental property investor, we also care about rents. Talk to me about rents.
Yeah, so guess what, guys? Rents went up again in 2024. I feel like this is the one that I've had to get a little bit louder on. That, guys, this is so normal. It is so normal for rents to go up. It's happened every year in Jacksonville since 1985. There's actually only one year that was an exception, and that was 2010. And that was during the Great Recession year. So every other year, rents have gone up. So let's just kind of like put that to the side. It is not normal. It's not just sort of be on the, on the defensive that they might go down or whatnot. Like, it's just so abnormal for that to happen. It can. I'm not saying it's impossible, but it is not normal. And of course, rents went up last year. But here's the thing. Last quarter, when we did the market update, I shared with you that we are in a soft rental market for single family rental properties in Jacksonville. And rents have appreciated, but they've only appreciated less than 1%, which is below the norm for Jacksonville. So we are still in a soft rental market. But guys, this is one of the reasons I'm so excited to share this with you today. It's because it's heating up again. And I'm really excited about what's on the other side of a soft rental market.
Before I think anybody can believe you that it's heating up again, let's talk about this like soft rental market thing, right? Like why did it feel that way?
All right. So how did we get to a soft single family rental market in Jacksonville in 2024? This is a slide that I shared in the last quarterly market update. And what I showed you was median rents and their appreciation for single family and multifamily. So I separated it. And you can see that in 2022, single family rents went up a ton, multifamily rents went up kind of at the normal level. 2023, things started to change. And in 2023, multifamily rents went down over 4%. They declined over 4%. Median rents went up 1.5%. By 2024, that decline still was there for multifamily. And for single family rents, as we just noted, single family rents went up just less than 1%. Well, the reason why single family rents are in a soft rental market is because of the glut of multifamily starts that happened from 2021 to 2023. So these single family and multifamily are related, right? If you have a glut of multifamily properties that hit the market, that's going to increase supply substantially in a short amount of time. And it's really going to affect multifamily rents, but it's going to have an impact on single family rents. And that's the reason that single family rents have been in a soft market in 2024.
Got it. So the softness is attributed to multifamily rent starts.
Yes.
I assume that you have a counterpoint to that now.
Well, let's just take a look at what's happened in 2024. Okay. So for 2021 to 2023, there was a glut of money, and Jacksonville was like the darling market to build single family and multifamily properties. But in multifamily, if you are the darling market and there's a ton of money, you can flip the supply a lot easier. You can bring a ton of units to market very quickly. And those units can also go away very quickly. It's like the decisions that money makes.
Yeah.
Well, so multifamily starts in Jacksonville in 2024 are actually down 76%. And they're expected to stay low from 2025 to 2028. Guys, this is the first time that I'm sharing this information with you. I'm going to be getting really, really loud about this graph right here, because when multifamily supply is really low for the next 3-4 years, what do you think that does to single family properties?
I mean, I think all things equal, people rather have a single family property, right? So like if there isn't this like giant discount on multifamily, people are going to stick to wanting single family. And if there isn't this like bevy of offer in multifamily where it creates this overly competitive thing and they have to drop their prices, then single family is going to do even better than it normally does.
I mean, think about this, right? Multifamily starts last year and the years before were way up. You can see it on the graph. And we still had rents in single family appreciate. Imagine if you did not have that amount of multifamily supply reaching the market. You still have a ton of people living here that want to rent homes. So this is a great thing for all of us that own single family rental properties when we're thinking about rents going forward in 2025 and all the way through 2028.
Got it.
But then I said, all right, well, how does this compare with other places in Florida, right? Is this the only market this is happening? Because if people are thinking about moving and living and renting in a certain place in Florida, they have a few options. Well, guess what? Jacksonville's decrease in multifamily starts is very unusual for the state of Florida. Tampa had about 9,000 starts in 2023. They had about 7,000 starts in 2024, and they're expecting about 5,600 on average from 2025 to 2028. So they actually are going down a little bit, about 20% for their multifamily starts, but it's not like it's fallen off a cliff. Orlando and Miami are right about the same level of multifamily starts from 2025 to 2028. But look at Jacksonville. We're not expecting to have more than 2,000 starts ever from 2025 to 2028. We're going to average about 1,800 is what the projection is. That's 74% of a decrease in starts, and it's going to stay that way. So our risk of oversupply of the market from a multifamily perspective is a whole lot less here in Jacksonville compared to our sister cities in the state of Florida.
This just continues to reinforce my idea that Jacksonville will continue to be a single family home market, right? Like there is so many folks want to buy multifamily. They come looking for multifamily, but it's like here in this magical little spot where so many people want to live right now, single family continues to be the ruling asset class.
It is. And, the name of the game here is to make sure that you have positive cash flow in your properties. We want to be in the game. We want these assets to pay for themselves. And we want to be in the game in a market like Jacksonville where it's going to grow. And that's how we really change people's lives through rental property investing. It doesn't work if properties don't have significant rental demand. And this slide and the slide previously show us that we're in a position of strength as single family rental property owners. We don't have to worry about multifamily having the same effect that it started to have over the last few years as far as bringing us into that soft rental market status.
Makes sense.
Yep. And here's what the data looks like, JWB internally, and the best data that I can get on the for rent inventory level. It's really hard to get for rent inventory. It's not as simple as just pulling it off the MLS. So what I did is I pulled for rent listings on HotPad, Zillow, and Trulia, and I did it at different points in time: January of this year, February, and March. And what we've seen in February and March is a 10.6% decrease in the number of listings. 1 month, we saw a 10.6% decrease in the number of listings. That helps our ability from a macro perspective to rent your homes. And so that's what we've seen internally for JWB. JWB, and this is just through March 8th, but we'd rented 359 homes from January 1st through March 8th of this year. That is up 26% over year of just last year. That is the most by far that we have ever rented in our company history through this far, through the year. So 26% year-over-year growth. There's the macro that is moving in our direction. Micro, I can't wait to share more about what we're doing internally to continue to help rent your homes more. But guys, this is a really good time to be renting a home.
Is it fair to say that this idea that home showings being up even more than homes rented is like a leading indicator that there's going to be even more homes rented?
I probably wouldn't. I mean, home showing data is week by week. I mean, we have consistently seen home showings data go up and up and up. I wouldn't say it's a leading indicator because people are looking at homes like a day before they go and rent it.
Okay.
But what I can tell you is that home showings are consistently up, right? They've doubled. We have doubled our home showings year over year. Yep. So it is another great stat just to show that people are excited about renting homes now, even more than they were a year ago. And you don't have the glut of multifamily supply weighing it down.
Got it. So I can read this slide myself and I can look at these numbers and think the symptoms of this soft market seem to be, the data is pointing towards like the idea that this was a blip in a moment in time, like you've been kind of saying.
Yeah, I mean, the blip in the moment in time was still seeing rents go up. Yeah, I think it just illustrates the consistency, the stability of this asset class. It's another one of those things. Like, what else are you gonna throw at this asset class? Eviction moratoriums, right? COVID, right? Like, what else are you gonna throw at this asset class? We just threw, 9,000 multifamily starts in a year for the last few years in Jacksonville, and rents continued to go up. It's because there's value to live in Jacksonville and people want to move here. And when you are thinking about where to put your money, you want to be in a place where people are moving. And that's why this asset class has been so consistent.
So is this advice that we gave about how to win in a soft rental market, is this still the kind of like the guiding thing if you're going through a turn or you're looking to rent something out right now?
It is. We're in a unique moment right here where I want you guys to see what's on the horizon right now, but I also need us to live in the moment. And the moment right now is that we are still in a soft rental market. Yeah. Rents went up less than 1% last year. So we need to have our feet firmly in the idea that it's a soft rental market, not change our approach yet. And so how do you win in a soft rental market? Just like you said, prioritizing occupancy over rental increases, be comfortable with flat or even rent decreases on a per property basis. We will give these recommendations to you. Always important to build up that rainy day fund. If you have questions about how to do that or what does that really mean, talk to my team, talk to your JWB portfolio manager, and we'll guide you there. Just as a general rule, 3 to 6 months of expenses per property is a great guiding light there. And as I mentioned, especially in moments where there's a soft rental market or something's a little bit not exactly normal, that's when we are here to shine for you, and we would love to have those conversations.
This is one of my favorite parts of the presentation here, GC, is when you just talked about what it actually feels to be in a soft rental market. The idea that, yes, home prices have gone up year over year, but a soft rental market essentially means, like you just said, a case-by-case basis of like the house down the street can experience this thing while your house experiences the other. And that's why the local knowledge is so important. You want to talk through this real quick?
Yeah, absolutely. And I thought no better example than to show you 2 of my own properties, right? You guys know I'm right here with you. I own rental properties in the same neighborhoods as you do. And I wanted to show you 2 examples where one property had a rent decrease and one property had a rent increase. And so you can see here the property on the left experienced 4.1% rent decrease, property on the right, 3.2% rent increase. Right? This is what a soft rental market feels like. That's how you largely get to less than 1% rent price appreciation. And that's why it's so critical to lean on us to help you make the right decisions. We know the specific neighborhoods that your home is in so well. We know what is hitting the market right now. We know what does supply look like. We know, is it new construction supply that might be competing with your new construction supply? Is it older home, renovated home supply? It's not as simple as, yes, rents are always going to go up because rents went up 1%, or less than 1% in Jacksonville. And it's not as simple as, I have a new construction home, so my rent should go up. Or I have an older home, so my rent should go up. You really need to rely on our market knowledge to help inform you. But we want you to be open to the idea that some rents might be going up. Some rents on a per property basis might be going down. It is okay. And the other thing, guys, is if you've been owning a home for any number of years now, when it comes to rent increases, you are likely playing with the house's money. The rent increases have been so much higher than what we told you to expect on your property evaluations that even a momentary decline, like I just experienced, 4% rent decrease, I'm winning. I'm winning with the 4% rent decrease because of all the profit centers over time and what they've delivered for us.
Yeah, that mirrors my experience for sure. So all right, so land us home here, GC. What is is this a good time to buy the way that it looks like on these data points?
I'm so glad anonymous attendee, read my mind right here. But it is a great time to buy, guys. 2025 is a great time to buy properties in Jacksonville. 2025 is a great time to rent properties in Jacksonville. Mm-hmm. This soft rental market that we have been in will not continue. It will be over at some point soon, and we are poised for growth. So it's a great time to rent. But there is this thing that really makes this a special time to invest. I feel like all three of these factors are coming together in 2025. And, I'll share the third one with you right now, which was the focus of our summit that we did a few weeks ago.
Does it rhyme with Schmountown?
It rhymes with Schmountown. Mm-hmm. Guys, I've done the research. We have been to these other cities. We have seen the effects of a downtown revitalization and what it does on your single family rental properties in terms of rent price, home price, and median income growth and appreciation. And for you as a rental property investor, the best way for you to win is to have an asset that pays for itself every single month, but is connected to a revitalized downtown. Because downtown cities appreciated 76% more than the US average since 2005. If you are familiar with success stories like Denver, Austin, Nashville, Tampa, that's the best way for your dollars to earn the best risk-adjusted returns because you don't have to take the risk, but you get all of the growth that is associated with downtowns starting to come online, becoming talent attraction meccas, right? Median incomes going up, all these great things happen. And if you own these beautiful single family rental properties surrounding the downtowns, you're going to get that growth indirectly.
Okay. Tell us more.
And this is shocking data I was sharing with you. Sometimes I do the data here. I look into the data and I'm even surprised. Guys, I didn't even know this, but back in 2005, Nashville, Austin, and Tampa home prices were below both Jacksonville and the US at that time. And here's the data to share it with you. But Nashville in 2005, the median home price was $146,900. For the US, it was $219,000. Right? Jacksonville was actually $172,000 in 2005. So you would have never expected that Nashville would be this wonderful success story for those who own single-family rental properties around downtown. But guess what? Nashville's downtown came online. It started to attract talent, people living there, people moving there, jobs, companies came in. And look at Nashville's median home sales price now. It's $478,600. It went from 49% below the US average in 2005 to 16% above. Imagine if you owned a rental property portfolio in Nashville in 2005.
I imagine it all the time, Gregg.
There we go. There we go. It's not the only one. You can look at Austin, Denver, and Tampa as well. Similar things have happened. And these cities had revitalized downtown somewhere around the 2010s.
Got it.
So our ideas and what we know to be true is that Jacksonville's downtown today is just like Austin and Nashville was in the early 2010s. And within a matter of years, home prices, rents, median income skyrocketed there. And that's what will happen here in Jacksonville. So, you know me, I put some data behind it.
Yep.
And I wanted to see, this guy was challenging me. He's like, all right, I think we're connecting the dots long term, but like, why is right now such an important time to invest in single family rental properties in Jacksonville? And I think the best way to depict it is to show residents living downtown in some of these other cities. Because as soon as people start moving downtown, that starts this flywheel effect. Because when people start moving downtown, more bars, restaurants, grocery stores, amenities start to come to those downtowns. And then more talent wants to be there and the jobs want to follow downtown and you become this talent destination. So in Austin, 7,600 downtown residents was the start of rapid growth. This is the numbers of residents living downtown in Austin and in Jacksonville at different points in time. So in 2010, they had 7,635 residents living downtown. By 2024, their population grew, it doubled, right? It grew 101% from 2010 to 2024. Yeah. And you can see the time frame here. So if this isn't enough kind of proof or help kind of convince what a special time this is, I said, well, let's look at Nashville. That's another raving success story. And Nashville is a similar number. 7,200 residents was the jumping off point for rapid growth in Nashville. That happened in 2013 in Nashville. And since reaching 7,200 residents in Nashville in 2013, just in 11 years, the population grew 174%. We now have 20,000 people living in Nashville. This is the type of growth we expect to happen in downtown Jacksonville.
Nice. So basically, we are mirroring the inflection point of both Austin and Nashville right now, which happened differently in Austin and Nashville, but it was that same number of 7,500 residents that we have downtown. And we know that once you get there, you're on the path to 10,000. And once you're on the path to 10,000, you get the 76% bump, right? 78% bump.
Yeah, that's what the data has shown us. So right now we are in that beautiful moment of like 2010 in Austin and 2013 in Nashville, where we're around 7,500 residents. And even before we start to have the impact of some of these downtown projects that we've been sharing with you, our downtown has grown 47% in the last 6 years. So people are already independently moving to downtown Jacksonville. And the resident population in downtown Jacksonville is expected to grow 135% by 2030. Does that kind of look like what the chart would look like for Nashville?
I mean, that's exactly what I would have pictured the chart looking like for Nashville.
Exactly, exactly. So this is why this is such a special moment in time for you to be adding single-family rental properties. We have over $5 billion of active development projects going on in downtown Jacksonville. Yep. And it's not just like, hey, pie in the sky, I hope we can do this project. Guys, we completed over 1.1 billion of development projects in Jacksonville from 2022 to 2024. That's the most in a 3-year span in Jacksonville's history. So things are being completed, things are being started, things are being moved through the pipeline. And where this is going to land is a similar trajectory for Nashville or Austin.
I mean, I look at this and seeing all these numbers being invested, it's like you see the snapshot of like what is, like you saw the inflection points of those cities, you see the snapshot of what is, and then this is like the promise of, this is why we know it's coming as well.
Exactly.
Yeah.
And you don't want to be late to a downtown revitalization because it gets a whole lot more expensive and your returns on investment go down. But the beautiful thing, and here's our JWB investment thesis, is that if you could go back in time and you could invest in cash flow properties in markets like Nashville in the early 2010s, you would buy as many rental properties as you could. Now you have the same opportunity in 2025 with JWB, and here in Jacksonville, I hope you take advantage of it because you have the opportunity for outsized growth that you don't have to take the risk on. That's the beautiful thing. People who came to Summit kind of heard me just talk about why I love this asset class so much. You can take advantage of this type of growth without taking on more risk. And that's why it's so important to invest in single family rental properties surrounding downtown, these JWB neighborhoods that we've been investing in since 2006. I am not advocating for you to go downtown and buy properties downtown because these will not be cash flow positive for you.
Yeah.
Stick to the model, stick to the best risk adjusted returns you can get. But what you have now is a phenomenal upside that I think is a special moment here in 2025 for Jacksonville.
I mean, it was impossible to deny that, like if you came to the summit, right? Like, and it's really even less possible to deny it if you've come the last 3 years, because everything that we keep saying keeps happening. The energy keeps on being more tangible. This idea that buying a workforce housing home in Jacksonville surrounding the urban area is kind of like buying Apple right after they released the iPod, feels very, very real, except in real estate, there is no insider trading. All the numbers are public.
Yeah.
You know what's happening. You know the shovel's in the ground. You know it by the permits. You know it by the data. That's all out there. There is no real advantage except for the perspective of like people that put this stuff together and give you this advice.
It's like if Nashville was Apple's sister company.
Yeah.
And Apple was like, hey, we're just going to follow our sister company in Nashville.
Yeah.
We're going to tell you exactly how we're going to do it. We're going to follow exactly what they did.
Yeah.
And we know what the results will be. People will be camping out for months to try to get the next iPod, right? That is really similar to how we think and what we believe Jacksonville will ascend to.
Got it. All right. So GC, so Anonymous Setende asked, I live in New York. What is the process of investing in Jacksonville? I think you can explain it within this slide here too, right?
Yeah, absolutely. Well, the first thing is just to jump on the phone with our team. We are all about understanding what your goals are, and everything I've shared with you here is to show the investment opportunity. But it's important to match that to your goals. So love to have a conversation with you. Text our team 904-293-0341. And as we go through those goals and those resources, we will get to the point where we get to recommend properties for you. And this is what our portfolio will look like. The portfolio that we build for you will look like this. The minimum investment per property is about $50,000. And your estimated rates of return will be somewhere between 9 to 10%. That's a true internal rate of return or an IRR. Interest rates that you can expect, clients are recently closing at about 5.3%, which is a lot lower than what you'll see out in the open market. And that's due to JWB's network of approved lenders and our relationships that are here to serve you. And we also do have wonderful incentives that are going on.
Tell us more. The incentives were, everybody was talking about the incentives at the summit, right? Like when I went on that dinner with our inner circle, I was like, man, these last couple of incentives, it's been
really good. And what we shared with you guys is, listen, as interest rates have stayed elevated longer, we're going to help out our clients with incentives. As interest rates come down, you would expect that those incentives are going to go away as well. But right now for our clients that purchase homes here, it's funny, I put February there. I guess I just didn't update the slide. I meant to say March, but what do you know?
Yeah, what do you know?
Well, we're going to extend that past February, you know?
There you go.
What do you think about
that? It's all
that?
about who you know. It's all about who you know around here.
This is for March, guys. So you get up to $12,000 of incentives for those purchases. Every property that you purchase right now will get an incentive, what's called the JWB maintenance credit. So you get between $4,000 to $6,000 per property that goes towards your first maintenance costs that come your way. So it's actually a check that gets sent to you in your first statement. You wind up with $4,000 to $6,000 depending on which property you choose, and there is your rainy day fund for maintenance, and it's already paid for through this incentive. So a great way to get started or to add properties to your portfolio. And for those who are adding 3 or more properties at a time, we double that incentive, and that's how you actually get up to $12,000 of incentives. You do have to purchase 3 or more to get the second incentive there. But it's a great time, guys, and I hope you reach out to our team. Here's how you can get in touch with us. If you're a new client or if you're a current client, just reach out to your portfolio manager, and we'll love to have that conversation with you.
GC, we got some questions that just jammed through here, but what I see from this report, what got me really excited was just this like new level of perspective of understanding that we've been on this up and down ride. You know, it's largely interest rate related. The fundamentals look good, right? Like people are moving here. Months of inventory is at historically normal levels there. And even the chart where you're showing kind of like this complete discrepancy between mortgage applications and where the rate is, and then this lagging indicator, this idea that we know that people are going to be like slow to act on this thing, and it always behooves us to be first on this thing because we can always refinance later, and that trend and historical line even dipping below, plus what we're seeing with the multifamily starts, right? So like prices are going to go up, rents are going to go up, downtown is going to pop, and it just feels like it's what I was telling you and Ice in here earlier. I'm just like, I'm getting really itchy to buy, right? Like that's like after seeing your presentation last week, I was just like, okay, I feel this feels like one of those moments where I'm gonna look back and think, all right, if I just push through this, believe it, believe what I see, and push some chips to the middle right now, I'm gonna be sitting back here like I'm doing with my Katina property, like I'm doing with my Minosa property, and thinking, yes, everybody now. It wasn't easy to do it because of the mass hysteria around me, but this moment of like everybody's afraid, I can be intelligent instead of fearful, and like follow what my eyes have shown me will make me look like a genius in front of my friends in 5 years.
I'm so confident that if you choose to put your money with us, or if you choose to put your money with us and you are a buy and hold investor, there is not a better decision you can make. And that's after managing over $1 billion of your money, But when you look at the strength of this market, as long as you give yourself a buy and hold mentality, right? A bare minimum of a 5-year hold, right? I'm so clear it's going to be, right? This is built to be a 10 to 20-year hold. But guys, I can't exactly tell you what's going to happen with interest rates in the short run. I can't exactly tell you what's going to happen with pricing in the short run. I can give you my best guess, but none of that really matters to me because I know 5 years from now, 10 years from now, 20 years from now, when those outcomes that you need to be solved need to be solved by single family rental properties in a growth market like Jacksonville with a team that is vertically integrated and aligned it's the best place to put your money.
Certainly feels like that, especially in a world that feels so uncertain at this moment. And at the end of the day, like staying put is not the move.
Right.
Right.
Yep.
All right, let's jump through some questions. You ready?
Let's do it.
Rapid fire. Leslie Wilson says, what do you think about rental estimates given on Zillow?
On a per property basis, I wouldn't trust it. On an overall Jacksonville macro, like on the level of the MSA or the city that you're looking at, I think it can be pretty helpful. So just wouldn't use it on an individual basis.
MOI is at 6 months. What level do you think we should start to brace ourselves? Thanks.
There's just a lot that goes into it, right? If interest rates were low right now and inventory was surging and MOI was at 6 right now, I would say, maybe there's something to take note of here. Now, the opposite is true right now. We're at 6, but interest rates are really high, so that's suppressing demand. And inventory over the last 8 months is only going up 4%. So I don't think it's as simple as putting a number to it. I think it's something that we need to talk about routinely and look beyond just months of inventory so I can give you the ancillary data and perspective to help.
All dude BJ McKay says, who changed the interest rates over the last 4 years and why? That's a long one.
That's a long one. A lot of shows we've done on that, BJ. You know what? Just jump on the phone. BJ's a longtime client. Jump on the phone with our team and we'll be able to kind of walk you through it, can give you access to all of the research and data and shows that we've put together on that. And if keep coming back and keep asking the question, I'll have a little bit more time to dive into it on the next one.
All right. An anonymous attendee says, Gregg, I love your data-based approach to everything. I think it would be really helpful for all investors to track days on market for JWB properties and how to make this number outperform the market in a similar way that you do with everything else.
Hey, thank you so much.
Not bad.
That's really nice.
Yeah.
I wonder if that was like my mom who just like
Anonymous. Yeah. Jag is
Thank
asking.
you very, very much for that compliment. I appreciate it.
Jag is asking, why do you think multifamily starts drop so much in this market?
I'm glad you asked, Jag. So it's a really astute observation. So, in Jacksonville compared to other markets in the state of Florida, our rents, while they're high here for us and they have risen, they're actually lower than in other places in the country. And so when big money is thinking about how to best use the land that they have for the highest and best use, they're first going to go to apartments because that's the most profitable way for them to use the land. Well, our rents in Jacksonville, even though they're higher than what they used to be, are not as high as in other places like Tampa, Miami, Orlando. And so the rents in those other places are still high enough to justify apartment construction.
Mm-hmm.
In Jacksonville, the rents are not high enough because of the other ancillary costs that have gone up, like insurance and the debt costs and everything else. So it just doesn't pencil right now. So that same land that would have gone to an apartment last year or 2 years ago, now will be turned into townhomes and be sold as for sale townhomes by these developers. So that's the reason why in other parts of the state, you're still seeing a very high number of construction starts. But this is a great thing for Jacksonville because this does not mean that we're going to have a glut of multifamily, and we're not going to have a lot of multifamily as we start to go forward in the future years. It's a great thing to own single family rental properties when there's not a lot of what people want, and that will be single family rental properties.
Makes sense. Amy Roberts says, hey, Gregg, our Violet Willow home purchased in 2016 tenant has just renewed for 2 more years. That will make 11 years with the first and only tenant in that 2016 year. New build. We should have Amy on the show.
Oh, I love Amy.
Amy, come on the show.
Amy and Keith, we just have appreciated serving you guys for so many years. It's awesome to hear about your success.
That's really cool. The Shaman says, has a JWB property sold to an investor gone down in value after 3 years of owning ever?
No, not that I can remember. I mean, there have been some clients that have made knee-jerk reactions to sell after owning for less than 3 years, and we try to advise them not to do that. And I'm sure that there is some example of somebody who, sold after not following our advice. But no, if you buy and hold in this model, I don't believe that there's been one investor's price that has gone down. And I'm doing this off the cuff. I don't have the data to support it, but I'm going over like 3,500 rental properties sold, but no, I don't think so.
Got it. All right. And then last question from an anonymous attendee. It seems Jacksonville takes up a large area. What defines a downtown and how close is surrounding downtown, quote unquote?
It seems Jacksonville takes up a large. What defines the downtown and how close is surrounding downtown? Okay. So Jacksonville's downtown is actually 3.9 square miles. It's in the heart of the city, right next to the St. Johns River. And so that's downtown. That's actually defined there. Where we invest are those neighborhoods that are maybe a 5 to maybe 15-minute drive to downtown. And so that might be, up to maybe 15 or 20 miles on average. Those are the markets where you can get positive cash flow. They're great markets to be able to have risk mitigation, but they're close enough that people still want to move there and still work downtown and still go downtown to have fun. And that's why the home price appreciation will be felt in those JWB neighborhoods. You don't have to be directly in downtown to benefit from this.
Got it. Nadim's saying that his property has gone down by 20,000 and that bothers him. What advice do you have there?
Well, I would love to take a look at that one, Nadim. Please get on the phone with us, Nadim. Let's talk about that property specifically because that's news to me, and I would love to dig a little bit deeper into that one.
Okay, let's do it, Nadim. And then BJ McKay says, what does it look like with building materials and import tax on cost of building?
What does it look like with building materials and import tax on the cost of building? So building materials, we have been waiting for the cost of materials to go down forever. Really not feeling that. I sit in our meetings every single month and analyze the profitability on each property that we sell. And I see what we spend on construction and it has not gone down for us. I'm hearing some chirping out there that it should be going down, but I've been hearing that for years. So building materials have gone way up over the years. They continue to be elevated. And then import taxing. So we're still all trying to figure out what's going on with the tariff situation. And I think we're all just along for the ride there. So we are getting emails sometimes from our supplier. I've seen some emails from our suppliers who are saying, hey, we're going to have to pass this tariff along. And then, the next day the tariff is not there. And so then they just hit like recall. They send us another email and say, hey, listen, guess what? We're not going to have to pass along that cost to you. I don't know. We're in a wait and see environment when it comes to building construction costs.
A lot of stuff to wait and see. It feels like the one thing that you can count on is that Jacksonville is going to continue to grow. Downtown is going to happen. This like ramp of, increased home price appreciation is coming, and it's not going to be a below median home price market forever, right? Like I feel like this is a really good moment where we're still underpriced. There is still a lot that's good coming in the future. In the short future, it feels like some things are going to get really good here. So it feels like a good time to buy.
Ditto.
Ditto. All right. That being said, this Tuesday coming up, we're doing a how to minimize your tax expenses.
Ooh, that's right.
So it has been requested. We are bringing on the Maven, Leslie Wilson, who has a really amazing lifestyle, like early retirement, really has minimized her taxes. You and her are going to have a really, really good conversation around like maximizing tax savings right in time for tax season.
Can't wait. Can't wait. Leslie, can't wait to hang out with you on the show. Super excited to have you.
Good job. Good job putting this together, GC.
Thanks, buddy.
Any advice for people?
Don't be average.